Okay, welcome back to another episode of Banking Without Borders. Today we're going to be doing our June monthly recap, and we've got lots to talk about today. I say that every time, but we really do, and some really interesting topics. So we have two stories from Starling Bank. One is about artificial intelligence. If you're listening to this, I'm doing air quotes because Starling Bank have launched a chatbot, so to speak, called Spending Intelligence. But frankly, it's, in my opinion, not very intelligent, so I'd like to talk to you about that. They also are looking to launch in the US, which is something that both Revolut and Monzo have attempted to do. I'm also still incredibly frustrated by the fact that they don't have a credit card in the UK, but they're looking to take on the US market, which needs you to have a credit card, so that's really, really frustrating. So we're going to talk about that. Chase UK as well there's a small story from Chase UK. They've essentially traumatized someone with their app. We've also got a bank account that has merged with a biscuit. So I never thought I'd see the day, but we have biscuits and banking colliding. It's a new bank account, and I want to talk to you about that. And we also have Klarna doing a copy and paste of Revolut. We'll round up the video or the episode with the latest and greatest interest rates from both the UK and the European Union, because Jan is here today, and Jan is going to discuss the EU savings rates with you. So buddy, shall we begin with Starling?
Yeah, Johnny, thanks for the great intro. Let's start with Starling. They have launched their own AI chatbot that's powered by Google Gemini. It's called Spending Intelligence, and maybe we should start by discussing what it can't do. Apparently, you can't compare spending across different categories. You can't check how much you've sent to a specific payee. You can't view spending across more than a 1-year period, and you can't get budgeting or savings advice. So maybe you could tell us a little bit about what it can do.
Yeah, I've had the opportunity to test it. And like I said at the top of the show, I'm really unimpressed by this. So I've got it up here on my phone right now, and we can ask it some questions. So this is Spending Intelligence. Let's just start with, what can you do? Okay, it's thinking. It's scheming. Oh, okay. How much did I spend last month? Should be quite an easy one. What? Okay, all right.
Just wondering what kind of questions you're supposed to ask this chatbot then, if these basic questions don't work, right?
At Starling Group, we are excited to be launching Spending Intelligence. They can ask questions such as, how much did I spend eating out last month? Or how much did I spend on bills last year?
Where it lacks like complexity or intelligence is its ability to aggregate like spending categories and payees. And so you could be like, oh, how much did I spend in total last month between like entertainment, groceries, and possibly like include a payee, maybe like you have a cleaner who's like a sole trader that you pay to a personal account, and you want to have a look at how much you're spending on them versus other categories. You can't do that. I don't know if that's a fault of Starling Bank. Well, they released this product, but I think Starling will have difficulty making this product much more advanced than it already is, because they're at the behest of regulation, right? They can't, and GDPR, they can't grab your data to such detail, and they definitely don't want to be sharing it with Google Gemini and potentially having the chatbot trained on it. So they're kind of constrained by regulation and how much they can actually offer with this. I just wish that they possibly didn't call this artificial intelligence, Jan, or spending intelligence. Why not just call it like spending search? Call it what it is, Jan. It's just like a glorified search bot that can just gather a little bit of extra data for you, save you a bit of time, because ultimately you could just draw the data, you could extract it in a CSV, and if you wanted to, you could drop it into ChatGPT and ask it to do a lot more than this. I'm not suggesting you share your banking details with your banking data with ChatGPT, but you could just do a little bit of work on Excel and gather far more insight than this. And I think the biggest problem I have with this is that it's just not intelligent enough. And maybe that's because we've been kind of trained now to expect our expectations of artificial intelligence is so much greater than what they can actually do, particularly in the context of banking, Jan. And that's why this isn't really making much of a splash.
Yeah, no, Johnny, I think it's just clearly underwhelming, as you said already. Not sure that we're overwhelmed by all the other artificial intelligence tools out there and their functionalities. I think Starling is clearly under-delivering here, and I'd be curious why. You mentioned it could be due to data minimization. I'm not sure, to be honest, because they have Google Gemini integrated there, right? So it already has access to your data. I don't know, like we might be worth actually trying to explore that in detail by reading the data policy of Starling.
They've said that Gemini can't use like your queries or your prompts to train the model.
All right, yeah, I get that. I'm not sure if that's the best way forward. I would personally probably prefer functionality over data minimization in this case. Or you just don't integrate something like this. But like what you shouldn't do under all circumstances is integrate a half-finished product into your banking app and then call it intelligence. If it's clearly, not gonna say dumb, but you know what I mean, right? Lacking features.
It's the race to be first. You know, they are the first bank to do this, and maybe they race to do it because they want to be seen as more advanced, possibly in an environment when they're kind of lacking or falling behind. This was an opportunity for them to step ahead.
Yeah, there's a lot of pressure on corporations to do something with artificial intelligence. Artificial intelligence is a huge buzzword nowadays. And as soon as you have something intelligent, or something artificially intelligent in your product lineup, you have a different standing with investors, with the public in general, because you're considered a very advanced company. And I guess that's happening here as well.
Do you think that people would be interested in greater features and better logic within the language model if you consented to it? So it asks you, do you want to share your details, your payee details, the people you paid, your banking, spending data, so we can give you more insight?
Let's be realistic though, Johnny. How many people would actually decline that and say, hey, I don't want to share my detailed payment data with Google? How many are going to do that? I think it's the minority.
What about if they could just at least keep it in-house? Like, I'm not an engineer, I'm a dummy, but couldn't they build this themselves and keep, like, at least at this basic level? Like, why? I've used Gemini. It's so powerful that this is not powerful. And why couldn't they just build this in like to this capability themselves? And then they could at least have all of the data walled in privately, which they already have access to anyway, rather than having to get Google in to then have the constraints of, well, we can't do much with this because we don't want to share your data with Google.
Yeah, it's a good question. I guess only the people at Starling can actually answer.
Well, if they're going to answer that question, they can answer the next one. When are we getting a credit card? Because if you're going to launch in the US, you're going to need a credit card, okay? And we've talked about this before, but in the United States of America, credit cards are king.
Yeah, it's a good question. For sure, I guess a credit card will be incredibly useful in the US, and they probably understand that. That would probably be the first thing they'd be launching after acquiring an existing bank with a banking license or getting one themselves. But I do, however, like the idea of using Engine to transform an existing, maybe less digitized US bank or creating a bank themselves.
The US still feels quite archaic in its banking means, even in 2025, right? Do you think there's still an opportunity for a breakout digital bank in the US? I mean, I know we've got Chime and Revolut are trying, but it's hard because of regulation to even get a banking license in the US. But that is changing because of the Trump administration. That's why Starling Bank are making this move now, because of deregulation.
Oh, for sure. There is, the US banking market, especially on a regional level, still feels somewhat archaic. It's a good word, actually, compared to Europe. In my opinion, I have a few American clients, actually, and whenever they try to pay me using an ACH transfer, they have to physically drive to their bank and deposit a transfer slip in order to do that. They can't do it through the online banking. That's kind of incredible. When that person first told me, I thought it was an excuse, and then I did some research, and it happened to be the case. I could not imagine that. Right?
Do they take a horse?
Yeah, I assume they use the car, but that's on a regional level. I assume with these big banks, you don't have that problem. But in general, there's a lot of potential. The US is a huge market, right? 350 million or so population. So it's incredibly big, and it's the biggest economy in the world as well. And that combined with the fact that there is some, the digitization is lacking a little bit in terms of banking. I think that's a good combination here and a lot of potential coming out of it. And that's also one of the reasons why you see these mobile wallets being so popular in the US. You have Zelle, you have Venmo, and there's several more. That's not the case in Europe, at least not in Germany so much. I can't think of one aside from PayPal that's really, like a pure mobile wallet without a banking license, literally just there to receive funds and send them out again.
Like you said, you've got like Venmo, for example, on one end of the spectrum. Then you've got like your legacy regional bank. And then is this what Starling trying to meet in the middle of the two?
I assume that's what they're trying. And that's what Revolut is trying as well, in my opinion. Klarna as well, which is an upcoming topic. We'll talk about that in a few minutes, I believe.
Yeah, we will. But first, I want to talk about this story from Chase UK. Jan, I want to tell you all about this. Basically, Chase UK had a complaint made against them by a neurodivergent lady. We're calling her Mrs. C. Mrs. C was upset because the app doesn't provide dark mode, and she felt like she didn't matter as a result of that. So she complained to the financial ombudsman, who actually ruled in her favor, Jan, and awarded her a lump sum of money. Do you use dark mode?
Well, I personally don't, Johnny, but that's just my preference. I do know people that use dark mode on a daily basis. Some people prefer it. I'm not a big fan of it. You can see it in your background, right? It's kind of dark, and my background is very bright.
My life is in dark mode.
I love the light, right? It keeps me awake. And that's why I have my phone not in dark mode. But yeah, it's a matter of preference for me. Sure. But I believe for some people, it helps them access these products, right? It's needed.
This lady, it's obviously needed. Something to do with being neurodivergent. So Chase said no. Chase said no. They said JP Morgan Chase, the world's largest bank on the road to being the first $1 trillion bank, said no, we can't do this. We can't have dark mode because it would be expensive and colossal. Was their words.
Yeah.
And
you know what I'm asking myself? So this lady was awarded £150 compensation, which sounds obviously very little for such a big bank, right? It's something they won't even bother about, but now imagine all the service providers that don't offer dark modes in the app. If all of their customers are technically entitled to £150 compensation, what's more expensive, developing the dark mode, right? Or paying out these compensations?
That's a good point. Well, according to Chase UK, it's probably cheaper to pay out the compensation because they're saying that it's colossal and expensive. But let's lighten up, Jan, because I have a really serious question that I need to ask you. I've been meaning to ask you this.
Go ahead.
Are you familiar with jammy Dodgers?
No, I'm not. What's that, Johnny?
Do you like biscuits?
I love biscuits, yeah.
Good. Well, we have a new bank account, new current account in the UK. It's based on the jammy Dodger, and it's called Biscuit. Oh, it's round the wrong way. Sorry.
Hey.
Sorry, everyone.
Could you maybe mention what a jammy Dodger is at first? Is that a biscuit brand or?
So it's not a brand per se, it's a type of biscuit. It's got a really crusty? It's got a really crunchy exterior, and inside you've got some jam in the middle.
So it's biscuit displayed there, right?
Yeah, that's the biscuit, that's the Dodger. It works extremely well, both like on its own as a lonely biscuit, or if you pair it with a cup of tea. Now that's quintessentially British. It's one of our main kind of hobbies here in the UK is dunking biscuits in tea. It's what we're really good at. We've been doing it for many years. And now we have the Biscuit Bank. You get a current account with 2% interest, a little bit like Crew Bank, right? Another bank in the UK, Jan, that launched with somewhere between 3 and 4% interest on a current account. But, a bit of a higher interest rate on your current account, which is okay. Arguably, you shouldn't be depositing too much money in your current account anyway, only enough to cover your bills and your spending. And then we've got the big headline is 2% cashback, Jan, on direct debits. Now, there's no other bank in the UK that's providing that right now. Santander Edge is £3 a month, 1% on household bills. And NatWest, the reward account, earns £4 for paying 2 or more direct debits. So you can earn 2% cashback. And Jan, I thought, wow, 2% cashback. My mortgage, mate, is £1,700 a month. 2% on that. That's awesome. Unfortunately, though, it's capped up to £1,500 a year. So the maximum amount of money you can make on this is £30. So again, that's what I'm saying. It takes the biscuit, mate, because it kind of fizzles out a little bit, It has a bit of a crunch, but it doesn't taste that good.
Right. Yeah. It's a good point.
You do get 7%. I'll just jump in.
Go ahead, sorry.
You do get, you're okay. You do get 7% on a regular saver, 7.10%. You can deposit up to £300 a month. So there's a little bit of a boosted savings rate there. There's no overseas fixed fee transactions or exchange rate markup because you get Visa's exchange rates. So it's a good international spending card. They don't offer the current account switching service here either, Jan. I mean, they're clearly, I think, trying to target savers with 7.1% and bill payers, but it's pittance. It's really pittance, up to £30 a year in cashback. I mean, you want me to change my bank account, change my direct debits for that? One of my favorite biscuits is a hobnob. And this is not a hobnob. To me, this is more like a rich tea.
Yeah, interesting point. Maybe something to add though, Johnny.
Sure.
We definitely see they're losing money on this, right? They're offering a savings rate that's better than the rate provided by the Bank of England. They're doing this obviously to attract some customers at first, which makes sense from a strategic point of view. But we've seen banks launch these kind of very attractive offers at first, and then cut down once they reach a certain amount of customers. And I expect this to happen here as well.
I think it's really difficult for banks these days to stand out without having to spend millions, because we're just so used to having like the high bar set of Chase UK, and just generally like the way that banks just give out free money when you sign up. Like ongoing cashback offers like this just aren't that enticing, even if you go for 2% instead of 1%. Now, if we just move on to Klarna here for a moment, Jan, I think this story is somewhat quite small, but if you're familiar with Klarna, I think it's quite interesting. The big story here is they're now launching a bank account. They piloted a debit card in the US, in partnership with Visa. And why I think this is interesting is because they also recently launched mobile plans, which is something that our friends over at Revolut, Jan, recently did. Just before Trump announced his new tariffs, Klarna were on the verge of doing an IPO, and the tariffs upended the market, caused a lot of chaos, and as a result, they paused the IPO. And then all of a sudden, they've gone away and they've started this new banking product. We've got mobile plans, and they're seemingly releasing more and more products and features. Do you want to open a Klarna bank account?
I wouldn't be opposed to do so, to be honest, Johnny, if the features are attractive enough. And I know for a fact that in Europe they have a few savings accounts. They actually offer different tiers with different interest, and it's deposit insured. So I don't see why one shouldn't open one of them. I believe one of the main reasons why they're trying to transform themselves into a neobank right now, before this IPO, is that they're struggling with their buy now pay later business model, which has experienced a large amount of credit losses in the past, right? So it's not really favorable conditions for an IPO. If you have a business that's kind of not very profitable, maybe in a field where the general outlook is kind of negative, you don't want to go ahead with your initial public offering.
You said yourself about the general outlook being quite negative. And I mean, it has been. We have had like heightened levels of inflation. We have had like market turmoil. We've had wars in like Ukraine, but we've certainly not lived through like an 07, 08 like property like market meltdown. And I think maybe some people are frightened of Klarna, investors are frightened of Klarna, because we haven't properly seen how it would operate in a world of like real economic failure. Whereas like, I guess if you can go into banking, if you can accumulate like deposits from savings accounts or greater deposits from savings accounts, that will secure your balance sheet more than having just like loads of leverage, having like lent loads of money out and then all of a sudden there's a credit crunch.
Big danger here, especially if they're already struggling with this kind of business model. Who knows? Like maybe they would totally fail, become bankrupt at some point, especially if it's not profitable right now. And that's why there's a lot of pressure to make this transformation before going ahead with the IPO. And it makes sense from a business perspective, in my opinion. And I'm excited to see what they're going to launch, honestly. Because I've always
me too.
considered them to be quite an innovative company.
You're always the optimist. I like it. You're right. They are very innovative. They are a financial tech organization, and it should be quite interesting to see how they approach this. It's funny really how the landscape or the way that people are attracted to banks and where they deposit their money has changed significantly over the last decade, 15, 20 years probably, because like 20 years ago, people would only deposit money with places that were incredibly secure or had built up years and years of reputation or credibility. But now it's like, well, we know Klarna are going to be FDIC insured in the US, so your money is safe. So let's just try it, because they're going to do something unique and something interesting. And that's a really good place to be right now if you're a fintech looking to get into banking, because consumers are open to trying new things. And like Jan said, it'll be interesting to see what they offer, and that could be quite compelling. You did mention interest rates from Klarna. So should we use this opportunity now to segue into the interest rates that we have currently for the European Union?
Yeah, let's do exactly that. And this is a first time here, so any feedback from the audience is always welcome. On the June 5th meeting, the ECB cut the rates by 25 basis points, which obviously led to a decrease in interest rates that are being offered by banks. Right now, there's still different easy access accounts across the European Union that are available in several markets. With quite attractive rates, in my opinion. We have Bank with 2.26%. We have N26 with 2.25% in certain markets like Spain and Italy. In some other markets, they offer less, 2% in Germany, for example. And German customers, they get the ECB linked interest rates, but only the metal ones. Trade Republic offers the ECB interest rates without any cut, and you don't have to pay for it, which is really nice in my opinion. And then you have Klarna up to 2.25%, depending on the market. In Germany and a few other markets, a little bit less. There are also a few other players that seem more attractive at first, but really aren't when you have a closer look. As an example, Comdirect offers 3% for the first 6 months, which sounds obviously very attractive, but only 0.75% afterwards. Consorsbank, similar situation, 2.8% for 3 months at first, 1% afterwards. General question, which other markets should we cover in our interest rate overview? Please just write it into the comments and let us know.
It's looking pretty bleak in the European Union, isn't it? I suppose that base rate doesn't really help, but fortunately it's a result of inflation coming down, whereas in the UK, well, the current base rate is 4.25%. The Bank of England is scheduled to meet again on the 7th of August. I think this is important to mention. We don't know what they're going to do. I think we can predict that they'll stay the same or come down. They're not going to put the interest rates up. That's important to mention because the 7th of August is still a while away. So between now and then, it's very likely that the rates I discuss now will probably remain relatively similar. Possibly set a reminder in your calendar for the 7th of August so you're prepared for that meeting just in case things change, particularly if you're using a variable easy access account where the rate could change at any moment. And one of the best rates at the moment is the easy access account from Atom Bank at 4.75%. This gives you unlimited access so you can withdraw the money as you please. Then there's the Family Building Society, 4.52%, really straightforward account. There's unlimited withdrawals and you can deposit up to £250,000 into that account. Notice accounts. Now, RCI Bank have a notice period of 95 days and it's 4.6%. So you've got that interest rate for 95 days. That's way beyond August. So that means that if interest rates do come down, all the banks are going to jump on that. They're going to reduce their interest rates. Well, this RCI bank rate will remain the same for 95 days. You'll also get an advance warning ahead of time if they're going to reduce the rate, which is quite nice. How kind of them. Fixed term accounts, I'm not going to go into too much detail over these because look, this isn't financial advice, but fixes right now just aren't that compelling. I can put a table up right now so you can have a look, but they're really not that good. I mean, Oxbury Bank, 4.48%, 6 for 6 months. But the Banking Without Borders UK rate of the month, the Plum Cash ISA. And this includes a variable rate, so a rate that could change if the Bank of England reduce interest rates, of 3.29%, and that is paid monthly. And there's a fixed rate of 1.69% for the first year. I think it's a really good rate and it's a really good account if you're able to just deposit 20,000 or deposit a sum of money and forget about it and leave it. Because if you make a withdrawal, there won't be a penalty. But if you make 3 withdrawals per year, if you make 4 withdrawals, then your rate will drop. So if you're able to just leave the money alone, then this is a good account. Okay, so that's everything that we have for today. Hope you enjoyed the video. Hope you enjoyed listening if we're currently in your ears. As always, if you'd like to support Jan and I, please do consider subscribing to us on YouTube if you're watching, like the video and subscribing to our podcast. And we'll catch up with you next week, right?
Yeah, we will. Thanks, Johnny, for moderating this outro, and thanks everyone else for listening. In case you have any feedback, please just write it into the comments. We're always trying to improve, and as you see, this is not perfect, but we're always striving for perfection, always trying to get better. So let's, please help us to make this as useful as possible for you.